Hello everybody, it's Luther Wilson III here on Monday, July 22nd, 2024. As a lot of you know, I'm a real estate investor, real estate professional here in the Kansas City market, representing for Upside Property Services. Wanted to take a few minutes today to talk more about how I've been able to invest and acquire properties, single family homes here in the Kansas City market, more over the last 5 years than I ever have before. And it hasn't been a whole lot of transactions, but it's definitely been a step up from where I was. You know, a lot of you know my background, grew up in the real estate business. My parents are still active in the business in one way or another over the last 30 years. And then I got involved around 2008, 2009, and have been on a process ever since then, trying to figure out how I can get more involved as a real estate investor and acting as a realtor and property manager during that time too. And so on a previous video, I had mentioned how I had partnered with someone, an investor, a capital investor in 2019, and how that dramatically changed or dramatically affected my real estate investing career. And so I wanted to dive in a little bit deeper about what he and I did. And since then, I've been able to invest with one other capital investor. And I think that may be eye-opening for some of you and help encourage you to see that you can do the same type of thing. So 2019, I met a gentleman through Bigger Pockets. He lives in Canada. He and I connected and we decided we were going to partner up. And our main goal was to buy and hold single family homes in the Kansas City area. And he had a certain amount of capital, liquid capital that he could invest along with me, but we still had to figure out how we could leverage it because it was only going to get us so far. So we started a company. We started an LLC. Purpose was to invest in real estate. We got all the documents going with an attorney and wanted to make sure that we did everything proper and on the up and up. And we got the EIN number. And from there, we got the business bank account open. And then my partner put a certain amount of money into the business bank account. And so from there, we had to figure out, how we were going to acquire properties. We had a general idea because I had been in the business. He had been in the business. He had owned some properties before we met. And of course, I had been a realtor working with investors for about 8 years at that time. And so we had a pretty good idea of how we could do it. And we had to look at, some different opportunities. And we spoke with a number of different lenders. And what we did is we did the BRRRR strategy, which I'm sure a lot of you are familiar with. You buy, renovate, rent, refinance, and repeat. And so we believed that that was going to be a great way, which it is a great way, to be able to buy these properties, get them renovated, refinance, and then, get them to generate cash flow from there. And so we bought our first property. I believe it was November of 2019. We used a hard money loan, which covered the purchase of the property and as well as a good portion of the renovation cost. But it didn't quite cover everything that we needed, okay? That's a key point because a lot of investors, that's something that they face. They have to sort out the gap funds, whether that's getting a renovation done or whether that's down payment money, okay? So we acquired the property, used hard money, got through the renovation process, got the refinance done, and then from there, instead of renting the property out, we decided to do seller financing, which is another key part. Our specialty, my specialty, has been investor financing and seller financing the last couple of years. And there's been a lot more people who are seeing seller financing as a great opportunity to generate cash flow from their investment properties, mostly single family homes, and they don't have to deal with as many maintenance issues and the everyday landlord challenges. You can essentially make more money and not have to deal with the biggest pain points for real estate investors, landlords that is. And so that's what we did on our first project. We bought the house in Independence, Missouri for $70,000. We did minor repairs. We put $15,000 into the rehab, and the house appraised for $108,000. We did the cash out refi, and then from there, actually, I shouldn't even say cash out refi. We did the refi because the amount that we had tied up in the property was more than what the new loan amount was. That's another key element that investors have to keep in mind. If there's money to cash out on the refi, then it's a cash out. But in this case, and actually in a lot of cases, there's no money to cash out. So we just did the refi. Refied, and then did seller financing. That was our first deal together. And since then, I've done 12 transactions with that particular partner. And I brought on a new capital investor last year. And with that particular investor, we've done one transaction together. So over the last 5 years, almost 5 years, I've been able to acquire 14 investment properties, okay, with 2 different investors, capital investors as partners, all right. Of those 14 that we purchased, we were able to keep 8 of those, all right. And then there was another 3 that we assigned them to another investor, all right. And then there was 2 that we wholetailed. We actually bought them outright and then immediately sold them, one of them on the market, one of them off market. And then the final one was your traditional renovate and resell, AKA fix and flip. So some key things there. Seller financing is a big part of our investment model, okay? Another big thing is being able to leverage the capital as efficiently as we can, okay? And then the other thing that is huge is those gap funds. So a big part of, what I'm looking at where we are today, second quarter 2024, is how we can continue to invest, leveraging capital in a way that is safe, more secure, ideally for the long term, because our goal was to keep all those properties, but unfortunately we had to sell some off to recoup some capital, pay off some debt and so forth, and figuring out how we can continue to do that. What's that look like in today's market? The BRRRR strategy is great when it works. When we're in times like today, we're still dealing with the effects of high inflation or higher inflation, and we're dealing with higher interest rates. The cost of the money, the cost to be able to just acquire properties is significantly more than it was 2 years ago, let alone 5 years ago or longer ago. And so where we are today, a truly great way that I think that investors, if they want to do buy and hold, is livable properties, turnkey properties. So that's a big thing that we're looking at now, okay? The drawback, some things you have to be mindful of, okay, the gap funds. If you're gonna leverage the capital, what is a great way to be able to do that, all right? So on another video, I'm gonna get into an investment model that I learned from a couple different people, but I'm gonna leave it there for now. So keep me in mind. It's Luther Wilson III, Upside Property Services. Not only am I working alongside investors, partnering with them, placing capital, growing our own portfolio, but I'm also a broker. So I do help other investors with their projects too. So keep me in mind. I'll be doing more videos, hopefully every single week. Check me out on LinkedIn, active on Facebook and Instagram as well. So thank you for your time. Have a great day.